and this is pound Swiss. I know a number of you are still in this trade and you've gone through the pain of giving back essentially a third of your overall profits. It's taking this one last December. This was a fantastic trade which we've been in for about 6 months now. This is the longest trade we've been in for quite some time. But now on the weekly, you remember what I said about selling the rally in a downward trend, and we're in a big range here, and we've still got a long way to go until we get to the bottom of this range here. Well, the good news is we've got a free bar retracement, and we've got a bearish pin bar reversal, which is our trigger for a sell. I knew this was going to happen. We discussed this last week about the potential of it happening. We hoped it was going to happen on the daily. It didn't happen on the daily, but the weekly even better, because the weekly is a much more of a stable time frame than the daily. And when we have the weekly doing things like this, then it's a great sign to us that we've got power numbers and the bigger players are singing from the same hymn sheet. And in this instance, we've got free bar reversal, bearish pin bar reversal, a signal here, and we've got this level here in the way. So if we look to a zoomed out view here, we can say that old support here has become new resistance, and this is typical of a downward trending market. When we've got a level breaking, we've got the extension below the level, as we've had for the previous 3 weeks here, 2 weeks shall I say, and now we've got the retest, a continuation to the downside. We've got the setup here on pound Swiss as what we're essentially waiting for dollar SEK, but we need to wait for dollar SEK for a few more weeks, of course. This is ready to go now, and there are two ways you could trade this depending on your risk appetite. You can either trade this as a standard entry, with your entry just below the low here, stop loss above the high, target the previous swing low as your first target. And I think here we've got a very decent profit potential. We've got roughly 3 to 1, and that's good enough. If you're risking 2%, then there's around about 5 to 6% potential gain. If you're risking 1%, it's entirely up to you. I don't know who the hell this is. There we go. So the other way of doing this as well is entering at the halfway point, as well as advanced entry. Now, this, as detailed in the strategist section, advanced pin bar reversal trading, doubles your reward to risk, because you place your trade at the midpoint, you have your entry at the high, and you rely on the fact that the market's going to retrace to the halfway point of the bar before potentially going down here, like so. Okay, so on one hand, if we've already got a 6 to 1, risking 2%, then you actually now have a 12 to 1. Okay, because you, instead of having, say, 100 pips difference between your entry and your stop loss, you've now got 50 because your entry is at the midpoint rather than the break of the low. However, the downside of this one, of course, is the fact that the market might not come back to fill you at the halfway point. It's a seller bar. It's a bearish pin bar reversal, but it's a seller bar. If it was a buyer bar and still a bearish pin bar reversal, i.e. if this bit was green here, the open and close, if the close was higher than the open, then there'll be more chance of you being triggered at the halfway point. However, as it's a seller bar, then it's less likely that the market's going to come up and fill you at the midpoint. So it's up to you, okay? I've placed an order below at the break of the low here because I think a 6 to 1 is pretty good anyway. And if you do place a standard entry, if your entry below the low, stop loss above the high, then you've got the added confirmation of the break of the low of the bar. That is a decent filter behind a successful trade. Okay, we've already made a decent profit on this, and we are further down into the trend, and there is this theory, and it's a very good theory, that the further a trend, even if it's a trend within inside a range, has evolved, the less likely it is to essentially have legs, because it's getting mature, this trend now. Okay, so it's entirely up to you. I'm going to really kind of like give you the scorecard here. Do you want high probability of a slightly lower reward? Take the standard entry just below the low, stop loss above the high. If you want a lower probability and a higher reward of getting filled in the trade in the first place and it's succeeding, then enter at the midpoint here, your stop loss above the high. It's entirely up to you. I'm just giving you a choice of two options. But as far as the setup on its own, in plain sight is concerned, it does look pretty good, and I would be very happy to take this one either way.